Good morning, good afternoon, good evening, and welcome to Martin Lucas Investor. Well, we've got Enphase Energy earnings just posted way down than we expected, or at least the share price has gone ballistic. It's just gone down 16%, and I've just bought more at 82. This is a huge overreaction. I actually wasn't going to buy, but at 82, I had to buy. I cannot believe that this has gone down so low. I can't actually believe it. But anyway, we're going to look at the figures right now. I have got the report. It's not yet posted on Robinhood, but I do have the report. So I'm going to bring you the report right now and have a look at it. I'll show you. I just bought 10 shares at 82. So my average has come down, and let's have a look at it. Let's see what happens. Let me show you the earnings reports. Let me put the time for the earnings. We've got just 16 minutes to go. I think this is a huge overreaction once again. It's not showing on Robinhood yet, but I will share with you what the earnings is and what this is likely to do to Solar Edge and other companies going forward. Anyway, let's leave it right there. And let me bring you the information here. So here we go. This is the earnings. This is the financial report. I'm going to actually take it from this screen and put it somewhere else so I can show it more clearly. Where that isn't going to work so well. So I'm going to take that over there and put that up there and put it over there. Just bear with me. There we go. I will share it like this. This is probably the best way of sharing it with you. We'll keep the price on the screen. We'll move the timer over here. So we've got the time above my head. There you go. So we can keep an eye on the time and what's going on. There we go. That's the countdown till the earnings. And let's go and zoom in here and let's have a look at the financials. Are you ready? Okay, here we go. This is the financial report from Enphase Energy, 2023 third quarter. Let's go through it before the earnings call starts. We've got 15 minutes to go. So here we go. We reported quarterly revenue 551 million in the third quarter of 2003, along with 48.4% for non-GAAP gross margin. We shipped 3,905,239 microconverters, or approximately 1.585 of megawatts DC and 86.2 megawatts hours IQ batteries. Financial highlights for the third quarter of 2003 listed below. Quarterly revenue of 551 million. GAAP gross margin of 47.5%. Non-GAAP gross of 48.4%, inclusive of net IRA benefit of 2.6%. GAAP operating income of 118 million. Non-GAAP operating income of 667.6 million. GAAP net income of 114 million. Non-GAAP net income of 141 million. GAAP diluted earnings per share 0.80 cents. Non-GAAP diluted earnings per share of $1.02. Free cash flow of 122 million. Ending cash equivalents and marketable securities of 1.78 billion. Okay, let's keep going a minute. Let's have a look. And I'm going to just compare in a few moments to the last earnings as well, so we can have both. Let me just do a bit of comparison for you. Just bear with me a second. So we bring up the Q2 financial results. Let's have a little comparison. So the revenue in Q2, just bear this in mind. We'll look at the difference here. Gap. We'll scroll down. You can see, here we go. I don't need to do that this way. You can see the Q2 earnings was 711 million. So we've dropped revenue to 551 million. Gross margins have actually improved from 45% to 47%. Operating expenses have reduced as well from 153,000 to 144. Operating income 170 million, 170 down to 117. Okay, we can see net income has dropped from 157 down to 113. Basic earnings per share 115, now we're down to 84 cents a share. Diluted 109 down to 80. Okay, we got the earnings in 12 minutes from now. Let's have a look. Let's keep going down. Total revenue for the third quarter of 23 was 551 million compared to 711 million in the second quarter of 2023. Due to macroeconomic conditions, our revenue in the United States for the third quarter of 2023 decreased approximately 16%. Now, by my calculation, we knew this was going to be down. However, I think the share price is dramatically lower than these numbers. That's my estimate looking at this right now. Let me just keep looking a bit, get some more information. From my perspective, we've got the earnings there. We've got that coming in. We get rid of that. From where I am looking, we have got a much bigger sell-off than we should have done. I think let me carry on reading the numbers. Our non-GAAP gross margin was 48.4% in the third quarter of 2023 compared to 46%. So their margins are increasing. The second quarter of 23, driven by an increased net IRA benefit. Our non-GAAP operating expenses were 99 million in the third quarter 23 compared to 98.2 million in the second quarter 23. Our non-GAAP operating income was 167 million in the third quarter compared to 230 million in the second quarter. We're excited. This is it. This is what's important. This is what's important now. Where we're going forward. Sorry, I beg your pardon, not excited. We exited I beg your pardon, I read that wrong. We exited the third quarter of 2023 with 1.78 billion in cash equivalents, and marketable securities, and generated 145.9 million in cash flow from operations in the third quarter of 2023. In July 2023, our board of directors approved a share repurchase program with authorization to purchase up to 1 billion of shares in our common stock. In the third quarter of 2023, we repurchased 846 shares of our common stock at an average price of 129 per share for a total of approximately 110 million. Okay, let's keep going. Our capital expenditures were 23.8 million in the third quarter of 2023 compared to 44 million in the second quarter of 2023. Capital expenditure requirements decreased as we largely completed building out our US manufacturing lines. IQ8 microinverters constituted approximately 86% of all microinverter shipments. We are just down 9 minutes before the call starts. I think it's dramatically oversold. Looking at these numbers, I had to buy some more at 82. I think we've dramatically oversold. I think we're going to get a bounce from this tonight. We're at 79. I just bought another 10 shares. So I am heavily into Enphase Energy now. We began shipments of our microconverters in the third quarter of 2023 from our contract manufacturer, Salcomp in Arlington, Texas. Arlington, just down the road from me. Our third contract manufacturer in the United States. We shipped approximately 531,000 microconverters to customers in the third quarter from our three contract manufacturers. Business highlights. So on October 23rd, Enphase Energy announced that it entered the solar market in Greece with the introduction of IQ8 microinverters with peak output AC power of 384 watts and IQ batteries. October the 19th, just a few days ago, Enphase Energy announced the availability in the United States and Canada of the Enphase IQ EV charger. This is all good news for the stock. I think we're dramatically oversold tonight. I'm glad I bought more at 82. It's now down at 79. I mean, how much do you... I'm going to be all in on one stock if I keep going on like this. But these numbers are down, but not in the relationship to the stock price. I think we're going to get a valuation later. This is going to be through the floor. Anyway, October 23rd, that's the latest announcements. Have we got any more information here? Okay, financial outlook. This is what we need, the financial outlook. Please do smash the like button, guys. We've got 104 watching. Please tap the like button. Spread the message about Enphase Energy to more people. Tap the like button. It will share it out. We've got 105 watching. Please do click subscribe and ring the bell. I go live up to 10 hours a day. I aim to be the most honest, real channel on YouTube TV. You know how many shares I've got. I share it with everybody. Please tap the like button. It will share it out and help the channel enormously. All right. Okay. Fourth quarter outlook. This is what the call is all about. For the fourth quarter, revenue to be within a range of 300 million to 350 million. Okay, so let's have a look, just compare where we were. So revenue to be in a range of 300 million. So the revenue, whoopsie daisy. What have I just done? Oops, I just did something really bad there. Oh, heck. Hang on. Can I fix that? I've just done something really silly. I don't know if I can fix it on the fly. It won't let me credits. Damn it. Don't worry, I'll fix that later. Okay, let me have a look. So the revenue, 300 million. So our revenue this year, now in this quarter was, let me go back up again. The revenue is 551 million. Okay, in Q3. We're expecting another reduction there. That's why it's gone down so much. Revenue to be within 300 million to 350 million, which includes shipments. Okay, 80 to 100. That's why. Gap gross margin to be within a range of 46%. Margins are improving to 49% with net IRA benefit of 38. So they're actually making more profit though. Margins are increasing, which includes shipments. Okay, gap gross margin to be within 46, 49. Non-gross 51. Okay. NRA benefits, gap expense. Okay, operating expenses to be within the range of 142. Okay, so that's what it is. We've got another drop, 300 million. I still think we've overreacted though. 300 million, if we look at it, we are 300 million. I'll do these calculations later, but to my estimation that we are oversold, dramatically oversold, and I think this is a temporary thing. When we get into the spring and we see, let me come back to the chart a minute. When we get back to the normal inflation, normal interest rates, which we will do in the spring, I'm sure, then we're going to see a massive rally on this. So I think this is temporary. If you can hold on, I've just bought more at 82. It's already coming up. It's 82 already. A huge sell-off. Things are bad, but not as bad as this. Anyway, we've got the earnings call in 4 minutes. We want to hear from the CEO and get a flavor for where we're going. But we've got a good indication now. I think. Anyway, I bought more. I'm happy to buy more. My average is now lowered. It's nowhere near what it wants to, what I want it to be. But nevertheless, I've lowered it, and yeah, I might have to sell some Coca-Cola to pay for all of this. But nevertheless, Amazon is a great beat, by the way. If you're following Amazon, a good beat on Amazon. They've gone up tonight. Very, very well indeed. And we had a great opportunity to buy Amazon today. You could have bought it for 119, it's 123 now. But anyway, we're looking at Enphase. I'd rather be in Enphase than I would Amazon. I think there's much more profit there. We're 82.80. We're already making money now on those purchases. I think it's oversold. Oh, blimey. Anyway, whew, we've got 3 minutes to go, and we're going to listen in. I don't know if we've got any slides. I think it's just it's just an audible show tonight. So let me let me refresh it. Okay, there's the music coming through. We've got 3 minutes to go. Welcome everybody over there on TikTok. If you're watching me on X, if you're watching me on Rumble as well, welcome to all of you. Thank you very much for joining me. So, If you've just tuned in, we go live up to 10 hours a day. Please do tap the like button. It's a huge help. I study and research Enphase all the time. If you want to know breaking news about Enphase, what I find out, I'm doing more and more research on it all the time. Please do tap the like button. It really helps the channel enormously. We've got 114 watching, just 25 likes. If you don't like my stream, that's absolutely fine. Please tap the down like button, because that way you won't be shown my stream again and we'll get a more engaged audience. We're all about building an engaged audience. So please do either tap the like or the down like, do something. I will tell you our channel has an average of 99.5% up like. And the reason why so many haven't liked, I'm assuming, is not because they don't like the stream. They're not logged in. So please log in, create a YouTube account. You don't have to be a streamer like me, but then you can engage, you can chat with us and be involved in the show. For your attention to my customer, it was a sell. Hi, thanks Martin for your attention to my customer. It was a sell. A brilliant Zach Zay, great. Just talking to one of my members. Now, just for a moment, we are members only because we do want to offer the best service to our members, because we don't want trolls coming in, a lot of scammers and bots and people hyping the stock and stuff like that. We want to be the most honest channel on YouTube TV. But what I will do just for a moment, I will give everyone the chance to comment. I will turn off members only. If we get any trolls or any hyping of stock or anyone spreading false information, I will go back to members only again, which 99% of our shows are. But please do be respectful. We aim to be a respectful channel. That's what we're all about. Okay, so just for the moment, we are open to everyone, so everyone can now comment live during the show. And please do not swear or and spread false information about anything. That would not be appreciated. We don't like you, we love you. Press the love button. Press the love button. I love it. That's from Zach Zay. Okay, just a few seconds to go now before the earnings begin. Most earnings calls are slightly late. I don't know why. I aim to go 1 minute early every time, so I'm always here. I don't know why billion-dollar companies are always 2 minutes or more late for their own earnings. I don't understand. Anyway, so far it's going up. I did buy in at 82. Added to my position. That's very, very nice. It's a huge gamble for me. It isn't, because the company is a great company, but it is a huge amount of money I've had to put in. Anyway, my average is 115, which is still undervalued. We'll do the calculations later. Anyway, let's go into the earnings call. It might be starting now. Let's go. Okay, not just yet. I'll mute the audio. You don't want to hear the audio. We don't want to get copyright on the channel for some music they're playing. Anyway, the audio's coming through. Did you buy at 83, 82, 81 when it went down? I bought at 82. Here we go.
To Enphase Energy's third quarter 2023 financial results conference call. All participants will be in a listen-only mode. And should you need any assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your telephone keypad. To remove yourself from the queue, please press star, then 2. In addition, we ask that you please limit yourself to 1 question and 1 follow-up on today's call. If you have additional questions, you may rejoin the queue. Please also note that this event is being recorded today. I would now like to turn the conference over to Zach Friedman. Please go ahead, sir.
Good afternoon, and thank you for joining us on today's conference call to discuss Enphase Energy's third quarter 2023 results. On today's call are Badri Kothandaraman, our President and Chief Executive Officer, Mandy Yang, our Chief Financial Officer, and Raghuveer Belur, our Chief Products Officer. After the market closed today, Enphase issued a press release announcing the results for its third quarter ended September 30, 2023. During this conference call, Enphase management will make forward-looking statements, including but not limited to statements related to our expected future financial performance, market trends, the capabilities of our technology and products, and the benefits to homeowners and installers, our operations, including manufacturing, customer service, and supply and demand, anticipated growth in existing and new markets, the timing of new product introductions, and regulatory and tax matters. These forward-looking statements involve significant risks and uncertainties, and our actual results and the timing of events could differ materially from these expectations. For a more complete discussion of the risks and uncertainties, please see our most recent Form 10-K and 10-Qs filed with the SEC. We caution you not to place any undue reliance on forward-looking statements and undertake no duty or obligation to update any forward-looking statements as a result of new information, future events, or changes in expectations. Also, please note that financial measures used on this call are expressed on a non-GAAP basis unless otherwise noted and have been adjusted to exclude certain charges. We have provided a reconciliation of these non-GAAP financial measures to GAAP financial measures in our earnings release furnished with the SEC on Form 8-K, which can also be found in the Investor Relations section of our website. Now I'd like to introduce Badri Kothandaraman, our President and Chief Executive Officer. Badri.
Good afternoon, and thanks for joining us today to discuss our third quarter 2023 financial results. We reported quarterly revenue of $551.1 million, shipped approximately 3.9 million microinverters and 86 megawatt hours of batteries, and generated free cash flow of $122 million. Approximately 86% of our Q3 microinverter shipments were IQ8. We exited the third quarter at 48% gross margin, 18% operating expense, and 30% operating income, all as a percentage of revenue on a non-GAAP basis and including the IRA benefit. Mandy will go into our financials later in the call. Let's now discuss how we are servicing customers. Our worldwide NPS was 77% in Q3 compared to 74% in Q2. Our NPS in North America was 78% compared to 77% in Q2. Our average call wait time was 1.3 minutes compared to 1.1 minutes in Q2. We made significant progress on root cause fixes of some customer issues and expanded our field service teams globally. Let's talk about operations. In general, the overall supply environment for microinverters and batteries is quite stable right now. Let's cover microinverters, specifically U.S. manufacturing. We began manufacturing at Salcomp's facility in Arlington, Texas during the third quarter. We shipped approximately 531,000 microinverters to customers in Q3 from our 3 contract manufacturers in the U.S., Flex in South Carolina, Foxconn in Wisconsin, and Salcomp in Texas. We expect to ship approximately 1 million microinverters to customers from our U.S. manufacturing facilities in Q4. Let's talk about batteries. For IQ batteries, we have 2 cell pack suppliers, both of which are in China. We have a manufacturing capacity of 300 megawatt hours per quarter, positioning us well to ramp up in 2024. We are looking at bringing manufacturing of IQ batteries into the U.S. by the middle of 2024. Let's now cover the regions. Our U.S. and international revenue mix for Q3 was 64 and 36% respectively. In the U.S., our revenue decreased 16% sequentially and 22% year-on-year. The overall sell-through of our microinverters was down 12% in Q3 compared to Q2. On the other hand, the sell-through of our IQ batteries in the U.S. was up by 34% in Q3 compared to Q2. In Europe, our revenue decreased 34% sequentially and increased 26% year-on-year at healthy gross margin. The sell-through of our microinverters in Europe was also down 35% in Q3 compared to Q2. The sell-through of our IQ batteries in Europe was down by 14% in Q3 compared to Q2. We are now shipping IQ microinverters and batteries into many countries in Europe. We recently entered UK, Sweden, Denmark, and Greece markets with both IQ8 microinverters and IQ batteries. Combined, these new markets represent more than 1.5 gigawatts of residential solar opportunity, with countries like the UK having a healthy battery attach rate of 30%. I'll provide some brief commentary on Australia. Our revenue in Australia more than doubled year on year. We are quite pleased with the launch of our Enphase Energy system. It is state-of-the-art, powered by IQ8 microinverters plus our third-generation battery. Let me comment on the rest of the world. In Brazil, we launched our IQ8P microinverters, 480 watts AC, the highest power microinverters that we have. We also launched the SolarGraph software platform and have good feedback from installers there. In addition, we started shipping both the 384 watts IQ8HC and the 480 watts IQ8P microinverters into India to support high-powered solar panels. Let's now talk about Q4 guidance. We are guiding revenue for Q4 in the range of $300 to $350 million. This reflects approximately $150 million of channel inventory correction in the US and Europe. In other words, we are under-shipping to the end market demand for our products by approximately $150 million. We anticipate under-shipment will continue in Q1 and expect our channel inventory to normalize in Q2. Of course, we are conservative and are assuming the demand picture is unchanged from the current level. So what has changed since 90 days ago when we told you that the inventory levels would normalize by the end of Q3? We have seen a substantial demand reduction in Europe. We've also seen the US market continue to fall, driven by California. When the demand falls, we think more decisive inventory correction becomes necessary. We are being conservative in our assumptions of no demand recovery until Q2 in this framework. So that explains the guidance. Despite the large reduction in Q4 guidance, we are maintaining our non-GAAP gross margin above 40% in our guidance without the IRA benefit. We aren't making any broad-based pricing changes at this time on microinverters, and we have already made the necessary changes on batteries before. Our pricing and operations team are doing an excellent job of managing pricing and reducing costs. Let's discuss some market trends. I'll give you a little more than usual color on markets. Let's split the U.S. market by non-California states and California. For non-California states, the sell-through of our microinverters was 4% lesser in Q3 compared to Q2. We see this business starting to stabilize given the weekly sell-through trends. In California, the sell-through of our microinverters was 25% lesser in Q3 compared to Q2 due to the NEM 3.0 transition. It will take a few more quarters for our installers to fully transition to NEM 3.0 and normalize sales to NEM 2.0 levels. Utility rates are continuing to move higher in California, with one California utility recently requesting a 22% rate hike. Assuming that even half of that rate hike is approved by the CPUC, the payback period for an M3 solar plus a battery system will become close to a NEM 2.0 solar-only system, so that's good. Let me say a few words about U.S. market share before I give more color on Europe. We see stable share today for our microinverters based on both internal as well as third-party data. Competition is not new for us. We have always relied on our differentiated technology with our distributed AC architecture, product quality, and customer service to win share, and we expect this to continue. We have many tools at our disposal, such as the installer services that we have bought. We've made several acquisitions over time in the last couple of years, such as the software tool for design and proposal, the permitting tools, lead management, etc. We have a lot of tools at our disposal to help our installers and our partnerships go a lot deeper in the downturn. Let's talk about Europe demand a little bit. We are facing two challenges in Europe, and the situation has dramatically changed from the last quarter, from 90 days ago. We saw a much weaker demand recovery from summer. We also see a lot of distributors facing oversupply of solar equipment, particularly panels, leading to much more aggressive destocking. Despite this temporary weakness, we think that the pullback in Europe will be temporary as the fundamentals remain strong, and we are relatively underpenetrated in the U.S. We are entering lots of new geographies with our IQ8 microinverters and batteries, so we remain very bullish about Europe. Let me spend a few minutes discussing our three largest markets in Europe, the Netherlands, France, and Germany, in detail. In Netherlands, our largest European market, our Q3 sell-through was down 40% compared to Q2. This was our first sequentially down quarter in the last 2 years. Installers tell us that the customers' fear of an export penalty and confusion around ending of the net metering has caused the market pullback. I was in Netherlands 2 weeks ago. I visited with our leading installers. I came away confident that this pullback will be short-lived. We think that the plans for net metering will be clarified after the country's elections in November. The payback period are continuing to be attractive in Netherlands. In addition, total system solutions, which includes batteries, solar, and EV chargers, are going to become the norm as dynamic tariffs become more prevalent in Netherlands. We are well positioned to take advantage of these changes. In France, our Q3 sell-through was down 34% compared to Q2, driven by seasonality. We see potential for this market to rebound very quickly. We are already seeing that as utility rates recently moved higher and are expected to increase even more in early 2024. In Germany, our Q3 sell-through was down 32% compared to Q2. We saw strong sequential growth in installer count and activations, and we are continuing to gain traction there. Let's talk about our new products, IQ batteries. Our sell-through for batteries has been steadily increasing over the last couple of quarters. We are at an inflection point for our battery business. With our IQ Battery 5P, we can deliver the best power specs and the best commissioning times of any Enphase battery till date at an industry-leading 15-year warranty and at the right price point. The battery adoption rates are on the rise globally. We are well positioned to grow battery sales throughout 2024. And we are working on entering even more countries in Europe and Asia in the next few months with our IQ Battery 5P. In addition, we expect to introduce our fourth generation battery in the middle of 2024. That will have a much reduced form factor and a reduced cost structure. As previously discussed, we have entered many new markets with the IQ8 family of microinverters. We plan to enter many more new markets in Europe and Asia in the next several months. Let's talk about our latest microinverter for the residential segment in emerging markets. I did mention this before. This is the IQ8P microinverter, our highest power microinverter till date, 480 watts of AC power that can support solar panels up to 650 watts DC for Brazil, India, South Africa, Mexico, Spain, and other emerging markets. We have started shipping the product into Brazil, South Africa, and India in Q3 and are on track to start shipping in Mexico and Spain in Q4. The other variant of the IQ8 microinverter, IQ8P microinverter, with a new three-phase cabling system is well suited for small commercial solar installations ranging from 20 to 200 kilowatts. We are doing beta installations as we speak there, and we expect to release the product this quarter into the U.S. market. We are very bullish about the small commercial solar business, where we believe we can add value to our business owners and installers with our quality and good customer experience. Let's cover EV charging. We shipped over 3,500 chargers in Q3, compared to over 6,600 chargers in Q2. We launched our IQ Smart EV chargers in the US just a few days ago, both US and in Canada, actually. The IQ EV charger is Wi-Fi enabled. It includes smart control and smart monitoring capabilities. It seamlessly integrates into our solar and battery systems to help homeowners maximize savings. For example, by directly charging from solar energy only. That's called green charging. We are also working on developing IQ EV chargers for many countries in Europe, and we expect to introduce them in the middle of 2024. Let's now discuss our installer platform briefly. SolarGraph, our cloud-based design and proposal software platform, now provides NEM 3.0 functionality for solar and battery systems in California. We're now offering 3D and shading features and continue to make progress on our new features and functions. The software platform is now available to installers in US, Germany, Austria, and Brazil. We expect to make this software release as part of our standard offering to any country that we enter. Let me conclude. We are managing through a slowdown in our overall demand. In the US, it is due to high interest rates and NEM 3.0. In Europe, it is due to broad macroeconomic conditions. Despite this, we are very bullish about our business long term. We see several positive drivers that will accelerate adoption, such as the 30% ITC tax credit in the US, rising utility rates globally, increased grid instability also globally, climate change, and of course, increasing EV adoption worldwide. We have no doubt that these will drive meaningful solar plus battery growth. Our strategy is very clear. We manage for the long term. We are doubling down on our relationships with our customers during these times. We are driving down installation times and investing in our customer service teams. We are also strongly investing in innovation. We are working on IQ9 and IQ10, our next two generations of microinverters, as well as the next two generations of batteries. We are also rapidly expanding worldwide with systems comprising of IQ8 microinverters, IQ batteries, IQ EV chargers, and home energy management software. We are introducing products for the small commercial and emerging residential solar markets, and we are making continuous enhancements to our installer platform in addition to driving towards world-class costs on our products. We remain very positive about our future growth and profitability and will continue to make best-in-class home energy systems with a laser focus on innovation, quality, and customer experience. With that, I will turn the call over to Mandy for her review of our financial results. Mandy?
Thanks, Badri, and good afternoon, everyone. I will provide more details related to our third quarter of 2023 financial results, as well as our business outlook for the fourth quarter of 2023. We have provided reconciliations of these non-GAAP to GAAP financial measures in our earnings release posted today, which can also be found in the IR section of our website. Total revenue for Q3 was $551.1 million. We shipped approximately 1,585.6 megawatts DC of microinverters and 86.2 megawatt hours of IQ batteries in the quarter. Non-GAAP gross margin for Q3 was 48.4%, compared to 46.2% in Q2. The increase was driven by increased net IRA benefit. GAAP gross margin was 47.5% for Q3. GAAP and non-GAAP gross margin for Q3 included $14.5 million of a net IRA benefit for our microinverters made in the US and shipped to customers in the quarter. Non-GAAP operating expenses were $99 million for Q3, compared to $98.2 million for Q2. We are diligently managing operating expenses and will continue to do so in the coming quarters. GAAP operating expenses were $144 million for Q3, compared to $153 million for Q2. GAAP operating expenses for Q3 included $41.1 million of stock-based compensation expenses and $3.9 million of amortization for acquired intangible assets. On a non-GAAP basis, income from operations for Q3 was $167.6 million, compared to $230.5 million for Q2. On a GAAP basis, income from operations was $118 million for Q3, compared to $170.3 million for Q2. On a non-GAAP basis, net income for Q3 was $141.8 million, compared to $205.6 million for Q2. This resulted in non-GAAP diluted earnings per share of $1.02 for Q3, compared to $1.47 for Q2. GAAP net income for Q3 was $114 million, compared to GAAP net income of $157.2 million for Q2. This resulted in GAAP diluted earnings per share of 80 cents for Q3, compared to $1.09 for Q2. We exited Q3 with a total cash equivalents, and marketable securities balance of $1.78 billion, compared to $1.8 billion at the end of Q2. As part of our $1 billion share repurchase program authorized by our board of directors in July 2023, we repurchased approximately 847,000 shares of Enphase common stock in Q3 at an average share price of $129.92 for $110 million. In addition, we spent approximately $8.5 million by withholding shares to cover withholding taxes for employee stock vesting in Q3. That reduced the diluted shares by approximately 59.8 thousand shares. We expect to continue this anti-dilution plan. In Q3, we generated $145.9 million in cash flow from operations and $122 million in free cash flow. Despite the macroeconomic challenges, we continue to generate healthy free cash flow as a result of our strong financial discipline. Capital expenditure was $23.8 million for Q3, compared to $44 million for Q2. Capital expenditure requirements decreased as we largely completed building out our U.S. manufacturing lines. Now let's discuss our outlook for the fourth quarter of 2023. We expected our revenue for Q4 to be within a range of $300 to $350 million, which includes shipments of 80 to 100 megawatt hours of active batteries. We expect GAAP gross margin to be within a range of 46 to 49% with net IRA benefit, and 38 to 41% before net IRA benefit. We expect non-GAAP gross margin to be within a range of 48 to 41% with net IRA benefit, and 40 to 43% before net IRA benefit. Non-GAAP gross margin excludes stock-based compensation expenses and acquisition-related amortization. We expect the net IRA benefit to be between $26 and $28 million on estimated shipments of 1 million units of U.S. manufactured microinverters. We expect our GAAP operating expenses to be within a range of $142 to $146 million, including approximately $57 million estimated for stock-based compensation expenses and acquisition-related expenses and amortization. We expect our non-GAAP operating expenses to be within a range of $85 to $89 million. We are reducing our non-GAAP operating expenses by 12% in Q4 as compared to Q3, but will not compromise on investing in customer service, innovation, and sales. Moving to tax, since we have utilized most of our net operating loss and research tax credit carry forward, we are now a significant U.S. cash taxpayer. We expect GAAP and non-GAAP annualized effective tax rate for 2023 to be at 22%, plus or minus 1% with IRA benefit. We expect the production credit, net of any incremental cost for domestic manufacturing, to be in the range of $26 to $28 per microinverter sold to customers in Q4. We expect to ship 1 million microinverters to customers this quarter. We now have all 3 of our U.S. manufacturing facilities operational. With that, I will open the line for questions.
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your telephone keypad. If you're using a speakerphone, please pick up your handset before pressing the keys. And to withdraw your question, please press star, then 2. Again, we ask that you please limit yourself to 1 question and 1 follow-up on today's call. If you have additional questions, you may rejoin the queue. At this time, we will take our first question, which will come from Brian Lee with Goldman Sachs. Please go ahead.
Hey guys, good afternoon. Thanks for taking the questions. I know the environment's pretty uncertain, so appreciate the additional sort of out-quarter visibility and some of the market-by-market color, Badri. So can I just ask, as you think about the framework, you said you'd undership in Q1 the way that you're undershipping in Q3 and Q4. Can you give us, a sense of how much you expect to undership in Q1? And then, you made the comment that this is all contingent upon sort of demand trends staying about where they're at. Can you give us a sense of what your internal expectations for demand trends are? It sounds like you don't expect them to get worse, but sort of can you quantify that a bit? And then I have a follow-up.
Yeah, I think there are a few percentages. First, to answer your question is the undershipment going to be close to $150 million in Q1? We expect it to be a little bit less than $150 million, but not too much less. That's our expectation. And second is I will talk about markets, and then it'll become clear to you. First of all, we see the non-California state stabilizing. We see that. So therefore, we aren't that much worried there. Of course, things could go a lot south during the winter, but we are already at pretty low levels, so we don't think so. California is definitely a wild card, but even if that goes down 10% more, I think we'll be fine because we expect Europe to recover a little more. Europe right now, for all the reasons I said, we basically, are undershipping quite a bit in order to normalize inventory, and that will be the fastest to normalize. So we expect Europe revenue to come back a little bit up in Q1. Therefore, what we expect at least, what we expect internally is that our revenues, sell-in revenues, we think will be close to what we are looking at in Q4. Of course, I don't have a crystal ball. I'm not giving you Q1 guidance, but this is our expectation right now. And Q2 onwards, we think the channel inventory is going to approach normalized levels. And therefore, that normalized level, assuming the demand picture is unchanged, that normal level is what we said, roughly around $450 to $500 million is the normal level. That assumes no change in demand from the current situation. So we expect our revenue to approach that number in the second quarter. But of course, that doesn't tell you too much because I'm assuming that the demand is the same at the current depressed level. One thing which I forgot to say is in France, which is another very big market for us, we already see the sell-through rates, for example, in the first 3 weeks of this quarter are already back up high, which is good. Basically, there was a utility rate hike in August. There is one more expected in February. So we think France will recover fast. Netherlands, we have some education to do. Like what I told you, there is some political uncertainty there. We think that will get cleared after Q4. So I think Q1 will be definitely better. And that's a great market where that market is now, in addition to solar, I think with the dynamic tariff starting to become prevalent in Netherlands, there is opportunity for battery storage in 7 million homes. Today, just so that everybody understands, Netherlands, there is 7 to 8 million homes. Solar is there in 2.2 million homes today. And now with this opportunity where net metering is going to evolve into something similar to California, not exactly the same, but very similar, what's going to happen is it opens up opportunity for solar plus storage in all 7 million homes. So I think long term is going to be great for us, but I told you what's going to happen in the short term.
Yeah, that's great context. Appreciate it. Just the second one here, and I'll pass it on the margins. Gross margins, non-GAAP, it seems like, you're guiding to low 40s ex IRA benefit. How much is that, it's down a couple hundred bips from what you've been tracking at recently. How much of that is due to pricing? How much due to mix? Maybe can you give us a sense of the margin puts and takes into year end? And then do you see anything that would put incremental pressure on the margins into next year? Thank you.
Yeah. It's pretty simple. And Brian, you will understand it quickly. You can see our storage business is actually going a little bit up. Our microinverter business is the one that is going a lot down now because of our undershipment. And therefore, if you see, it's a product mix, issue. And microinverters have a little bit more gross margin than storage. And therefore, with this product mix, that's why we have the guidance of non-GAAP gross margin 40 to 43% for the company without IRA. With IRA, non-GAAP gross margin of 48 to 51. So in terms of pricing, we are not planning to make any broad-based pricing changes. Of course, the pricing, there is a lot of competition, but, we have seen competition for the last few years since I've been here. We have a very disciplined business process. It's a pricing business process. It's called SPA. Phil Shen likes to talk about it. It's a special pricing adjustment. We have been doing that forever, and it is not new. That's one. And also in these times, of course, underloading, we have to work with our, contract manufacturers to take care of underloading. But in these times, especially when you have multiple suppliers for a particular component, multi-sourcing for a component, this is the opportunity where we can drop costs a lot. So our target, any good company in these times, we should be able to drop our cost by 10% for a year. We'll be targeting that. And so we have to talk both equations, pricing and cost. And so we are quite confident in our gross margins. This is what we do. It is not new. This is what we established when I joined the company, is we have a pricing team that prices based on value. We have a world-class cost team that works on costs. And it's business as usual for us in these environments.
All right, thank you. I'll pass it on.
Our next question will come from James West with Evercore ISI.
Hey, good afternoon, Badri.
Hi.
Badri, as we're going through this period of destocking and some weakness in certain markets, understanding that you've always faced competition and you have a very value-based pricing strategy, are you seeing any behavior that's by your competitors that is somewhat irrational, or is the market overall behaving rationally, understanding that this we'll get out of this in a few quarters?
Well, I'll be lying if I tell you I'm not seeing something irrational. Of course, installers are very stressed, right? They do want to take advantage of the lowest cost available at a given point in time. So therefore, sometimes without understanding, they may want to switch to somebody who's offering low cost. But usually, most of our installers are, they have a lot of experience. They're very well trained now, and they understand the importance of distributed architecture. They understand the importance of no single point of failure. They understand quality. They understand customer service. And therefore, you might save a few dollars up front, but if you have a quality problem, a service call by the installer is a truck roll. You spend a lot of money in one truck roll. And if you just do one more, that's it. You have no more room there, despite the low cost. So it's a penny wise, pound foolish strategy to do that. And they've all realized it. And, if you actually put things in context, let us say the pricing is $3 or $3.50 for watt. You look at the inverter bill of materials, probably of the order of 10%.
Right.
Should you play around there? Should you take a lot of risks there? And it's their call at the end of the day, and many of them are wise to say we're not going to make that call. So, we have a lot of robust discussions. This is the time where we are talking to customers more than ever. We have a lot of other tools at our disposal. For example, solar graph. We do design and proposal. We can generate leads for installers at very economical rates. We can help them on permitting services, for example, sometimes even free of charge. We have a lot of tools at our disposal to reduce their soft costs. And that's critical because we have to look at everything. We cannot look at component level. We have to look at the full system level in these times. And once you start looking at that and have these discussions, usually it comes back to, we get more market share, not less. And more installers want to move to us, not less. And you can see some evidence of that in the third-party reports.
Okay, got it. That's very helpful, Badri. Thank you. Then just one quick follow-up for me. You mentioned producing IQ batteries in the U.S. by middle of 2024. Did you give a capacity number along with that?
No, we have not given. We will provide more details as we come close to that date.
Okay, got it. Thanks.
Yep, thank you.
Our next question will come from Eric Stein with Craig-Hallum. Please go ahead.
Hi, everyone. So just talking about California, I can appreciate talking or thinking about that as a wild card, given what's going on in the market. But if I think about the expectation that market stays flat, but then the hangover from NEM, which you said has a few quarters here left to work out, I don't want to put words in your mouth, but is it fair to say that there is some cautious optimism about California as we get into the back half of next year?
Absolutely, yes. As we get into the back half, absolutely. Meaning, one is the utility rates are continuing to go up. The second is, let us assume the utility rates go up even by half the amount they are advertised. The payback, like what I said, is going to become, for a solar plus storage system, is going to become almost the same as a solar-only NEM 2 system. And, the economics are there actually today. The battery can not only provide resilience, it can help the grid during times of stress in August and September when the grid needs it the most. So it's a combination of, you get resilience for yourself, you make money by providing grid services, which is incorporated into the utility rates right now. And we are well positioned to doing that. Why? Because we got great microinverters, number one. We got batteries now that can discharge at very high power, double the power of our earlier batteries. Why is that important? Because during certain hours, you have the utility paying you a lot for exporting power to the grid. And what we can do, because of our high discharge rates, during those times, we can maximize the power. So we can do that. So we have solar plus storage. And of course, we have complete energy management software. and we couple that with our solar graph design and proposal tool, we have everything, all the optimization at the fingertips of the homeowner. And many times he needs to do nothing. He just needs to turn on our optimization engine. It'll do the right thing for him. So we're absolutely very bullish about California towards the second half of 2024.
Got it. And maybe just sticking with California for my follow-up, with NEM, is that transition takes place being the biggest factor? I mean, what are some of the other factors that cause California to be a wild card? What are the things that are maybe top of mind for you that could cause that market to take another leg down?
Yeah, this is Raghu. And as Badri mentioned, all of the potential tailwinds that are there. Remember, in an environment where the demand per home is continuing to go up, people are continuing to electrify, people are buying more and more EVs, heat pumps, etc. And couple that with utility rates where they are and going further up, this is the right solution. Solar plus battery is the right solution. The energy management software is absolutely the right solution in order to drive your ROI and as well as reduce your payback. And to that end, what we have done as well is a lot of education into the marketplace in terms of explaining to people, what the benefits of, solar plus battery system with energy management and et cetera, and going out there and educating the market as well as providing them with a lot of tools. So in this environment where demand's going up, you have the education, you have the tools, the financials are there, the payback's very good. That's the reason why we are extremely bullish about California coming back strongly.
So, to answer the question in another way, the headwinds that we see are if installers, aren't educated by us properly. If we don't do a good job of educating the installers, things can stall out a little bit. So it is important for us and other companies too, in this space, to make sure the installers, whatever we provide installers, the tools are very easy to use so that they can sit at the kitchen table and look at the homeowner in the eye and say, your payback is 6 years. And here is why your payback is 6 years, and explain it to them very confidently. And it's not just Enphase, it is Enphase plus our competition plus all of the energy companies. All of us have to do our job in training the installers. And I think that is, of course, that's a piece that is not very easy to do, and you cannot have enough of it. So that's the biggest headwind that I see.
Okay, thank you.
Our next question will come from Colin Rusch with Oppenheimer. Please go ahead.
Thanks so much, guys. Can you talk a little bit about how much modulation you can do with the OpEx? As you look at investing in these incremental programs and bringing these products to market, is there some incremental cutting that you can do, or there's going to be a regular spend increase on the R&D side?
No, we are cutting OpEx by 12% from Q3 to Q4. How are we doing that? We are on a hiring freeze, except for critical positions, for example, in sales and customer service, and to a little bit, on the innovation side there. So basically, that has got a big effect on, bringing down costs. The other ones are, there are a few professional expenses, like, for example, this is the time where we look at a lot of fat, cutting out a lot of fat in the company. For example, when the companies are doing well, we do hire a lot of contractors. And, we are looking at all of those, and we have taken all the necessary actions to cut that level as well. And of course, as we continue to grow, I cannot deny that there is some fat that we found we can easily cut in other areas. We were able to cut about 12%. We are always looking for further room to cut because we'd like to get back to our baseline of OpEx pretty quickly, which is 15% of sales. So, we'll give the guidance accordingly. And of course, this is a dislocation in revenue, and that is temporary, but we're very cognizant of that, and we're always going to be trying to operate close to our model, which is 15% of sales.
Excellent. And then on the component side, given the change in volumes that you guys are working through on the microinverter side, obviously you're guiding to reasonably stable gross margins here, but I'm assuming that there's going to be, some breakpoints on the components that you may run into with a negative impact. Can you just talk a little bit about how your suppliers are scaling down with you here over the next quarter or two or three, and what that might do to your COGS line?
Yeah, it is a tough situation for our contract manufacturers, no question. But we have great partners here. We have Flex, an amazing partner who helped us when we were, especially 2017, 2018, when we had some tough times, they were there right with us. Salcomp, also a great partner. So we work well together. This is the time where both of us can recognize, saying, okay, is this a short-term problem? Is this a long-term problem? Can we do things structurally? We recognize that both of us need to be profitable, not just one versus the other. And we do take some necessary actions. And all of those are confidential in terms of our relationships. We cannot disclose the actions we are taking, but our P&L always incorporates all of these. And so the message is over the next few quarters, we will continue to work with them. We will give you the P&L transparently in the guidance for gross margin. But we are very confident that, we are finding the right solutions working together.
Okay, thanks so much, guys.
Thank you.
And our next question will come from Philip Shen with Roth Capital. Please go ahead.
Hey guys, thanks for taking my questions. Badri, you brought up spas, so I figured I'd jump in with a question on that. As you know, our checks have come up with lower micro pricing under a bunch of spa agreements on the order of 10%. Does that resonate with you at all, or is that off base? I know you often will get something in return for some kind of price when you negotiate the spas, maybe a exclusivity or higher volume. Can you just talk through that a little bit? And then Mandy, can you talk through how spa accounting might work on your income, your financial statements? For example, do you net the spa, like the refunds, against your sales, so you have net sales, or do you accrue a liability on your balance sheet? Thanks.
So, SPA, first of all, for the others in the call, SPA stands for Special Pricing Adjustment. It is a business process that has been forever at Enphase. And it is always happening. It's business as usual. A large fraction of our business usually happens at what we call as ADLP, which is the distributor list price. And, if business happens at ADLP, there is no SPA. But for a small fraction of our customers, depending upon how their volumes may go up within the quarter, next quarter, depending on their forecast, we do SPAs. SPAs are, you have a volume price curve. And when the volume goes up, the price comes down. And that's how it is. And that process is very active. It's always been active. It's the one I instituted 6 years ago when I came. And the accounting for that is unchanged. Whatever, it is exactly what we have done in the last 6 years. So, you talk about a $10 reduction. All of those are anecdotal. They don't matter. One customer doesn't matter. It's not a trend. It is a large fraction of our customers buy at the list price. So, I'd like you to if there is a broad-based pricing adjustment, we will tell you. And we are telling you right now that there is no broad-based pricing adjustment from us. Yes, we will continue to do spas. That's the way of life for us. And sometimes it is a way for us to lock market share for the next, X amount of quarters. And we'll do that. It's business as usual. Nothing new.
So
Great.
Phil,
Thanks,
to answer your accounting question, yes, we accrue for spa rebates as our liability, right? When we recognize revenue, the associated future potential rebates for the current quarter shipping, we accrue as a reduction in revenue, and it's a liability on our balance sheet. Same accounting process, no change.
Right.
Great. Thanks, guys. Okay. And then shifting gears, appreciate that color. Thank you. I know you don't have any official guidance for 24, but was wondering if you could talk through how you expect margin to trend by quarter in 24. So you gave some perspective on Q1. There's undershipment there, close to Q4. So due to product mix, so should we expect Q1 margin to be similar to Q4 because that product mix is maybe more heavily skewed to batteries again? And then due to product mix returning back in this base case to more micros, potentially in Q2, after the undershipment in Q4 and 1, would you expect margins to return back to the pre-undershipment levels in Q2 of 24 and back half next year? Thanks.
Yeah, that's logical. It is logical. If at, Q1, what you said is right. We expect similar levels. Of course, I'm not giving guidance, but I'm just giving trends. And then Q2, we expect it to, because the mix is going to change. The microinverter mix is going to be a little bit higher than the prior quarter. So we expect that logically. That's correct.
Great. Okay. Thanks, guys. I'll pass it on.
Our next question will come from Mark Strauss with JP Morgan. Please go ahead.
Yes, thanks for taking our questions. I believe I asked this on the 2Q call as well, but just kind of given the precipitous decline in valuations across the space, I thought it's worth revisiting. So you're obviously sitting on a pile of cash. You continue to generate cash. Just curious your latest thoughts on M&A, if that's something that you're planning on leaning into until the macro improves here.
Yeah. We do take a look at a number of companies all the time, every week. I have an M&A meeting. There are a lot of companies that come. We are very careful, especially in these times, to not buy something in a hurry. We're also careful of, making sure that that company is aligned, of course, in terms of strategic fit and cultural fit. The former is extremely important. The latter is practically even more important. So the areas that we usually look for are, more in the energy management software, sometimes in, home automation, for example, small commercial solar, any innovation in batteries. We look for these. Usually we like smaller companies, bolt-on acquisitions. That's what we have done till now. But we are looking at all kinds of companies. Please stay tuned. If we are going to move on something, it won't be without you knowing.
Okay, thanks, Badri. And then just a real quick follow-up. I apologize if I missed this, but was there an update on the small commercial product, the timing or any color there?
Yes, there was. We are right now doing beta installations as we speak. The product is working great. We expect to introduce this product in this quarter, current quarter, and we expect to make some reasonable revenue out of this product in Q4.
Okay. Thanks, Badri.
Yes.
Our next question will come from Steve Fleischman with Wolfe Research. Please go ahead.
Yeah. Hi, thank you. $150 million of undership that you're talking about, could you break that out between the U.S. and Europe?
I would say approximately equal between the two.
Okay. Thank you. And then in Europe, the impact of, you mentioned two things, the weaker demand and then also the issues with the distributors destocking. Like, could you just give some flavor of what, when you look at the weakness you started to see, what are they about equal drivers? Is one, kind of dominating the other? Yeah.
Yeah. Actually, to tell you the truth, every country is a little bit different. Clubbing them together under macroeconomics will not do justice. But there are a few factors. Let me tell you, overall thing that can be generalized. It's basically, if you rewind to last year, all distributors, installers, consumers were a lot more aggressive due to the Ukraine crisis. The Ukraine crisis, the shortage of natural gas, caused many countries to be very aggressive to pull in their plans for renewables. And we saw a huge spike in virtually every country in Europe. Solar plus storage, everybody started stocking up a lot. And we also profited from that. Our revenue also peaked. But then that enthusiasm is, a little bit tempered right now. And because of that, what's happening is the distributors suddenly realizing that they got more on their hands. And also, earlier, maybe a year and a half back, the product availability wasn't that high because of that increase in demand. But now, all of the suppliers have geared up, especially panels. Product availability of panels is very high. So a lot of over-inventory, particularly on the panels, has happened. And that is putting a pressure on the distributors because they've purchased inventory at high prices before, and now the prices have collapsed on panels. So there is some financial weakness there. But again, they are they are conservative now, and they want to hold as less inventory as possible. So that's a kind of a macroeconomic. Now let's come to Netherlands, our biggest market. Netherlands has got very interesting dynamic that when I went there 2 weeks ago, because I went there when I heard that our demand was dropping, I got concerned. I went there, and when I looked at it, Netherlands situation is actually not so bad. If you see, their payback is about 6 years, but they had a scare recently, a couple of maybe 2 or 3 months ago, where an energy company called Van der Bron basically said that to the consumer, saying, we are going to charge you a penalty to export solar back into the grid. And Van der Bron is a very small fraction. There are about 35 energy companies, I think, in Netherlands. It's a deregulated market. Van der Bron is one of them. They serve about 3% of customers. They basically said that, we are going to charge you an export penalty. All they were trying to do is to put some pressure on the government, saying, you need to help us with net metering, because, the simple fact of the matter is, Netherlands has got wind, it's got solar. There is 2.2 million homes with solar out of 7 million homes. These, if they start to export solar energy in a random manner, the energy companies are finding they cannot handle that easily. So they are putting pressure on the government to say, okay, net metering needs to evolve into something where the customers have, self-consumption, which is solar plus storage. And so it's actually extremely good for us there. But the way they are doing it is, of course, a little bit disruptive. So there is the government is going to respond once it is in place. Now there is a election happening. Net metering clarity is going to come probably after that. And but the way it's going to evolve is this market. Net metering will still last until 2025. So we are covered for the next 2 years with good payback. And then the payback will be maintained after that with the combination of solar plus storage plus dynamic tariff, which is getting popular there. So that's the big picture in Netherlands. Many of the European countries are evolving in a similar way. Many of them have gotten dynamic tariffs. Germany is a little bit ahead. They don't have dynamic tariffs, but they introduced feed-in tariffs early, which very similar to net metering. Export is not paid as much as import. In fact, it's only a fraction. That is why Germany, you find 80% attach rate on batteries. So, long answer to your question, but that's the color on Europe.
I guess just to wrap the topic up overall, just let's say we continue to move away from the kind of Ukraine energy crisis conditions, but we do have these markets each put in these changes. Just does your kind of expectation of Europe kind of improving, can it be driven just by these market by market changes, or do you need to see some kind of move up in energy prices again?
Well, I didn't talk about energy prices. Energy prices are also increasing. In places like France, the energy prices are also going up. So, energy prices are going to help us. The utility rates are increasing. And so that is definitely going to be a tailwind. But, make no mistake, despite all of this, in a place like Netherlands, 2 gigawatts of solar, in a place like France, the payback is extremely good still. 5 to 6 years. Where can you get that? Even just for solar. It's going to evolve into solar plus storage with a payback of maybe 7 to 8 years, but still very good for a 25-year product. So, there is a small dislocation right now due to inventory issues due to these, but that's why we expect the ramp up, I won't say normalization, revenue recovery. A quick revenue recovery, at least to some level in Europe.
Great. Thank you.
Our next question will come from Jeff Osborne with Cowen. Please go ahead.
Yeah, thank you. Badri, I was just curious on your expectation for a 2Q recovery. What is your working assumption on normalized inventory in the channel? I think in the past you had talked about 8 to 10 weeks, and assuming that is still the case, I guess, is there an argument that, now that manufacturing is localized and continent by both yourself as well as competitors, that, why wouldn't that number be 5 or 6 weeks and maybe pressure would continue into Q2?
Yeah, what you're saying is possible, but we don't think so. So I'll give you a quick primer on the weeks on hand so you follow it. And I think generally, I'd like, to say that so that everybody follows it. For example, if you have, let's say you start off with 100 units at the beginning of a quarter in the channel, and let us say you drain inventory at 10 units a week. And you also ship into the channel at 10 units a week. Okay? So you ship into the channel at 10 units a week. You drain from the channel at 10 units a week. Therefore, at the end of the quarter, you find yourself at the same 100, because 100 plus 130, which is 13 weeks, minus 130, you have 100 units at the end of the quarter. You ask yourself, what is the weeks on hand? You say, that is 100 divided by 10. That's 10 weeks. So remember that number, 10 weeks. Now, I say, oh, my demand is suddenly dropped by, let us say, 40%. That means I have 4 units a week that is accumulating. So that means, and assume I ship the same number of units into the channel because I'm slow in recognizing that the situation has changed. So let us say I still ship the same 130 as before, but now my drain is only 78 instead of 130. So I therefore end up with 4 units excess per week, which is 52 units more than the last case. So now I have, at the end of the quarter, 152. 152, but my end customer demand is only 6 units a week. So I tell you that my weeks on hand now is 152 over 6, which is 25 weeks. So I suddenly go, my weeks on hand increases by 150% due to a 40% drop in demand. If I continue to be oblivious and ship the same material into the channel. So it can blow up disproportionately, right? And of course, the further the demand drops, the further your weeks on hand will go up, and the converse is true too. If the demand improves a little bit, the weeks on hand is going to come down fast. So we think that the distributors, will look at logical things here, because even a 10 to 12 week inventory will be the similar dollar number that they have held in the past, and in fact, a lesser dollar number that they have held in the past. So we think logic will prevail, and of course, end market demand could change all of that pretty quickly. So weeks on hand is not something that is obvious. It can really change drastically by small changes in demand. Which, I gave you the example there.
I appreciate that. My follow-up is, and correct me if I'm wrong, but I think you're allowed to, under the IRA, export U.S. manufactured goods to international jurisdictions. Is that something, A, you're already doing, or B, you intend to do in 2024?
Not doing today, but of course we'll consider.
Got it. Thank you.
And our next question will come from Julian Dumoulin-Smith with Bank of America. Please go ahead.
Hey, good afternoon, team. Thank you guys very much for the time. Appreciate it. Hey, I just wanted to pivot to a slightly different direction here, right? So you have a few of these exclusive deals across a number of different customers, but some larger ones, if you will. I'm curious, how do you think about, how quote-unquote locked in those are going into the next year, and how are you thinking about working together realistically as partners and optimizing your value proposition while dealing and addressing with their respective needs, which are clearly and likely dynamic, especially given the backdrop in California. If you can speak to that, those dynamics. I know I'm not trying to get into the contract specifics here, but really working with them, if you will, and how you think about how locked in that portion of volumes are.
Yeah, I presume you're talking about one large customer here. That's the only one we have, which is official. We love our partners, right? We work very closely with them. We value their relationship a lot. And we are there, we are at their service all the time, whether it's quality, whether it's customer experience, we value their relationship a lot. So, of course, we will be looking to renew all of those.
Right. Yeah, fair enough. It's difficult to be opined too much. And just coming back to, all these different contract manufacturing relationships, I know they might not be identical here, but how do you think about underutilization costs here? What are the commitments like? How flexible are the terms as you look at both flexing down and up the volumes through the course of the year here under these new arrangements?
Right. I did talk about it answering a prior question, and I will say the same thing here. We have great contract manufacturing partners. Flex has been, great for us. They particularly helped us when we were in trouble in 2017. We are grateful there. Our relationship has been very healthy, even during these times. And we are working together. Sometimes we look at a problem and say, is this a short-term problem or a long-term problem? If it is going to cause them pain, we are willing to restructure. And all of those accounting are in our P&L. We report it as part of our non-GAAP and GAAP gross margin. So you should read the P&L and know that everything is there. And we view this particular situation is temporary, but we are very cognizant of the fact that underloading is a pain for our contract manufacturer. So, and we think the right approach is to make sure both of us are profitable and share the pain. And we will be doing that.
Got it. All right. Well, best of luck, guys. We'll speak to you soon.
Thank you.
And our next question will come from Andrew Percoco with Morgan Stanley. Please go ahead.
Great. Thanks so much for squeezing me in. So I just wanted to come back to a prior question. It's clear that the demand backdrop is going to be a tough demand backdrop potentially for the next few quarters. Can you maybe just discuss the health of the average installer that is a recurring user of your equipment and their ability to manage through this period and transition to the TPO model? I think there's been some challenges around working capital and tax equity. So just curious, what you're seeing and what you're hearing from some of those maybe repeat buyers on the smaller scale side of the installer community. Thank you.
Yeah, I mean, we only hear the color from other industry news, but we do see some transition to the leasing model. We do see that clearly. For us, how does it affect us is we have some great partners. We have Sonova, great partners. John Berger is a close friend of mine. SunPower, Sunrun, and other leasing, partners. We do business with all of them. They're all great partners. So for us, it is, if loan moves to lease, our business, I would say, is, there could be some product mix issues, but business is nominally not affected. We have heard, anecdotes from a few industry sources that, installers in California, there are many long-tail installers who aren't in business any longer. But we don't have any direct data there. So I can only tell you what I know. Of course, it is a stressful time for them, and we are trying to help them with whatever we can, whether it leads or whether we can provide them some other services like our solar graph, etc. Whether we can help them with NEM3, their business. We are doing that, and that's the color that we have. In general, we do
Great,
business through distribution. We do business. Majority of the business we do is through distribution. And the distribution, one of the ways we would see it is in our payment, right? If we were to do direct business with all the installers, which we don't. We do business with distribution partners, so therefore we are one level, a little bit, away from, direct relationship with the long tail installers. But,
Yeah, that makes sense. Thank you. And my other questions have been answered, so I'll just leave it there.
Yeah, could you repeat the question? Oh, okay.
Our next question will come from Tristan Richardson with Scotiabank. Please go ahead.
Hey, good evening, guys. Thank you so much, Ask and Answer. Appreciate all the commentary on 24, and really just thinking about the commentary you made around stabilization next year, should we think that could there be a swing factor with some of the new markets you've entered, whether that's UK, Greece, Denmark, even India? Could that be a meaningful factor that could affect sort of the timing of that stabilization or present a growth wedge above kind of that 2Q timeframe you're talking about?
Absolutely. We have a lot of vectors of growth, and that's a great place for us to start. But we are, in the color I gave you, we didn't assume all of that. But we have absolutely so many countries that we were not present even a couple of quarters ago. Like we have introduced in, batteries and microinverters, actually batteries, for example, in Austria, in Spain, UK, as you correctly pointed out, Sweden, Denmark, Greece. We have plans to introduce to about 15 countries in the fourth quarter. Microinverters alone, they're all new countries. So that's one vector. New geography is very important, for us. But on the flip side, it does take some time to establish infrastructure there. You do need to build up your installer base. You do need to train them very well because our bread and butter is our installers. Therefore, we need to train them excellently, and we need to win them one by one. And that is a process in itself. It can be as early as 3 to 6 months, but it can be over a longer time frame as well. We got several new markets in Asia that are also interesting for us, like, for example, Taiwan, Korea. Indonesia, we are there today, but we are rapidly moving into IQ8. There are a few other smaller countries in Eastern Europe that we are going after. Small commercial, that's a very big one. The small commercial in the US is about 1 gigawatt. We are going to have that product this quarter. The small commercial opportunity in Europe is much bigger. It's about 10 plus gigawatts. And we are figuring out that one systematically because we can service that market less than 100 kilowatts with the products we have. So there, of course, pricing is something that we're looking there on how to be competitive in that segment. But we do have a lot of levers there on small commercial. So that is one more. The other one is EV charging. EV charger. We just introduced our connected EV charger. That is a big deal. Now, with everybody wanting to electrify, meaning their home, which is buying electric vehicles, electrify their vehicles, for example, our product will work with solar plus batteries, and it will help the homeowner optimize his bill. He can do green charging now. He doesn't need to spend money charging the vehicle from the grid. All he needs to do is to add about one-time investment. Of course, he's got to do that. 6 to 8 panels or 6 to 10 panels. He needs to add it if he buys an EV. And that is a huge opportunity. We are now following up and introducing these EV chargers in Europe, which is what I talked about. So early next year, we will have IQ EV chargers in Europe. Then the other one is home energy management software, right? We're now beginning with Germany. We now have the ability to also connect to third-party EV chargers and heat pumps. So now we can optimize the entire system, our solar, our storage, hopefully our EV chargers soon, but in the meantime, third-party EV chargers, third-party heat pumps. And giving the homeowner one app, all-in-one app, optimizing his energy from his fingertips. So that's energy management software. Plus, we have some hardware there, which we will eventually integrate into our gateway. So we'll roll that out to all the countries, including the US. So we got a lot of vectors there, which is, introduce solar plus batteries into many, many new countries worldwide. Introduce products for the small commercial markets worldwide. Introduce IQ Smart EV chargers, both in the US, which we have done, and worldwide. Energy management software, plus whatever hardware is required to manage heat pumps in third-party EVs worldwide. So we have a lot of vectors. Of course, I did not include that in the color which I gave, which is, conservative, from our perspective.
That's great, Badri. Appreciate all the extra comments tonight.
Thank you.
Our next question will come from Moses Sutton with BNP Paribas. Please go ahead.
Hi, Badri. Thank you for squeezing me in. I just wanted to tag on to Andrew's comment about the fat tail installer. Are you seeing stress outside of the California market? Are you seeing any installers talking to distributors asking for price concessions, maybe distributors asking for concessions on terms on receivables? Just curious if you could give a little more color on the health of the Tier 4.
Yeah, I'm just clarifying the question. You want to know the health of the business outside California, is that correct?
Specifically for the fat tail, for the really small installers.
Specifically for the long tail. The color that I can give you is the non-California business as a whole is, stabilizing right now. That's what we see. We see, Q3 was 4% down from Q2, and the first 3 weeks of Q4, which is the last 3 weeks of this quarter, are also not too bad. In fact, it's a little bit up. So we think the non-California business is pretty decent, but of course it is still down from the high levels that we had by nearly 35%, meaning from Q4 of last year, Q4 22, it is still down by nearly 30 to 35%. And your question is, how is the health of the long tail? It's a similar answer for us. We work with our business. If you see 80 plus percent probably, maybe 75% is the long tail there. So, we see all of them down, whether there are installers going out of business. We don't get that information, but I think we don't have that data. We do see the same trend, which is loans moving to leases. All our partners are pretty great. Sonova, SunPower, Sunrun. So, for us, it is moving from one hand to another hand, like what I said. That's the color I can give you.
That's very helpful. And then just any sense on Texas and Florida in particular? I know outside California is averaging a little better, but maybe specifically those markets?
Yeah, they were disproportionately down because the utility rates aren't as high compared to the increase in the interest rates. So they were worst affected, but we see many of them in Texas and California. Texas and Florida particularly moving to the lease model. We do see that, like what you said, and we do see that business starting to recover.
Thank you.
And our next question will come from Joseph Osha with Guggenheim Partners. Please go ahead.
Hey, thanks for fitting me in, Badri. I appreciate it. Two questions. First, following on from the previous one. Look, we all see Sunrun, Sonova, SunPower accessing, ABS or whatever markets for third-party ownership. I'm curious, do you know if your long tail has found any other solutions for third-party ownership? Or, when you talk about that avenue, is it basically those three companies that you're seeing? And I do have one other question.
Majority is those companies, and there are a few smaller leasing companies that are coming up too, but 90% is those three companies. That's right.
Okay, great. And then this is really more of a philosophical question. I know all of us on Wall Street just love to hear you talk about defending your gross margin, but given how the market is evolving, have you done some analysis, and are you sure that your business couldn't perhaps generate higher bottom line earnings if you simply grew it more quickly and allowed, say, a 35% gross margin? I'm just curious as to your philosophy as to why the gross margin has to stay where it is.
Well, it is the eternal question. Can I grow faster if I drop prices, right? I mean, for us, it is pricing. It's based on value. The moment we stop generating value, it is over. So that's why I never look at those in conjunction. Pricing, I don't base it on cost. The moment you base it on cost, it's a problem. Then you forget about the value drivers. And therefore, what that means is if we need to add value in both microinverters and batteries and software. And that's hard to do, but that's what we do for a living. Innovation is someone said it right in Silicon Valley, innovate or die. I mean, we are that company. That's our philosophy. So we believe high quality is high volume and high price, or the right price for value.
Okay, thank you. I appreciate that.
And our next question will come from Vikram Bagri with Citigroup. Please go ahead.
Good evening, everyone. Very helpful color on demand and supply dynamics in countries in Europe. But you mentioned you expect EU to recover a bit in your calculation of $300 million of inventory reductions over the next 2 quarters. Is that rebound, is that a function of Enphase entering a number of new countries in EU this year, as you mentioned, and gaining market share in existing markets such as Germany? Or the outlook for inventory reductions assumes that the base demand rebounds in first quarter, and on top of that, you gain market share in new as well as sort of like existing markets. And then if you can talk about U.S. market also, it seems like you're looking to defend market share. You haven't seen any declines in market share so far, but if there were some, you will look to defend that.
Yeah, I mean, we already told you that we aren't assuming the demand picture changing from the current levels in our assumptions. And basically, I'm not here to give guidance for Q1, but I'm just giving you a general color for Q1. So all our assumptions are based on demand picture not changing in the next, demand picture not changing from what it is today. So that's what we said in our assumptions. Then your question is on U.S. U.S. for us is we work with a lot of customers. This is the time where our partnerships, like what I said, are a lot deeper. Every one of our executives is always on the road visiting customers. Every opportunity to gain market share, we are all over it. And, like what I said, we have a number of tools. Yes, of course, it's the defending against competition. All competition is very important for us. We take everybody seriously. We work on our problems. We fix our problems. Our customer service, you see, many people simply stick to us for our quality and customer experience. Our net promoter score is 78 in the U.S. We are open 24/7, our call center. We have field service technicians who will show up in your home tomorrow if you have a problem today. Right? So we have if you put the total picture together, it's, innovation, quality, and customer experience. Now we have one more factor. We can give people a made in America product. Now, we do have that, and many of our installers love it because for example, we just had in Flex, in South Carolina, President Biden came and inaugurated that plant, and we had a lot of installers there, including not just installer partners, distribution partners. So it's very important for them. Made in America product right there in South Carolina, right there in Arlington, right there in Wisconsin. It is there. So we think that will help too. And, we are going to, in a similar vein, we're going to bring in our batteries as well in the U.S., and we will take advantage of the domestic content there. And so that will provide extra help to some of our leasing partners. So, we are always working on market share. We always take competition seriously, not just right now. This is how we do business.
Thanks, Badri. And as a follow-up, I wanted to quickly follow up on the capital allocation question earlier in the call. I was wondering if your priorities have changed given where the stock price is today. I see you repurchased about $110 million in shares versus $122 million of free cash flow this quarter. Should we expect similar trend going forward, share buybacks closely following free cash flow generation in quarters?
Yeah. Well, we have a lot of cash, like what you pointed out, $1.8 billion. We have shown that we are willing to buy back stock in a disciplined fashion. We have bought back stock in the last couple of quarters. I think we've bought back $310 million in total, $110 in Q3 and $200 million in the prior quarter. I think this is an opportunistic time for us where we can take advantage of the stock price. So we will be opportunistic about it.
Thank you very much.
Thank you.
And our next question will come from Praneeth Satish with Wells Fargo. Please go ahead.
Thanks for squeezing me in here. Long call. I guess I wanted to ask about Tesla's new Powerwall 3 offering and maybe what are kind of the puts and takes there, comparing that against your IQ8 and 5P battery. And I guess, do you anticipate any market share changes when this product is launched next year?
Yeah, hi, this is Raghu. And as Badri mentioned earlier on, look, competition's not new to us. And any company out there that's doing string inverters, we've been competing against those since the inception of the company. And we have a very, very strong value proposition against that technology, a technology that, we've been fighting against since 2008. So if you think about it, if you break it down, we just produce more energy. We do maximum power point tracking on a per module basis, right? Because we do power conversion right at the module itself. We are much more reliable. We don't have a single point of failure. That's a true value of the distributed architecture. So, even if one of our micros or the module were to fail or get impinged on energy, the rest of the system continues to operate. String inverters, on the other hand, are a very significant single point of failure. If that string inverter were to fail, your entire system is dead. Again, if you look at also design, installation, and maintenance, we don't have string designs anymore. Like, those string designs are a thing of the past. Those things went away in 2012. And with us, you don't have to do any stringing, no string design, no limitations there. You can put as many modules as you'd like. Installations all plug and play. And maintenance, we provide you with per module information, right? And with the traditional string inverters, you're completely blind to how your modules are performing. So I think that's going backwards. And finally, and arguably one of the most important elements of it is safety, right? You don't want any high voltage DC anywhere in the system. And so with Enphase, we are all low voltage DC, we are traditional AC. And the combination of high voltage DC and high energy chemistry is probably not very optimal. And on the reliability front, we mentioned one is system level reliability, which is not having a single point of failure. But look, our unit itself is extremely reliable. We offer 25-year warranty compared to other types of technologies that offer 10, 12-year warranties. And on the battery, if you break the battery down as well, modularity is extremely important. You don't need to have very large batteries, and you have whereas if our building block is 5 kilowatt hours, you can right size the system to exactly what the homeowner needs. But they mentioned the higher power of our third generation battery, our IQ battery 5P. The high C rate of the battery really is an economic benefit to the homeowner because you can export significant amounts of power during those times of the day or those times of the hour where you get compensated by the utility for exporting energy. And finally, on safety, we use lithium iron phosphate, LFP chemistry, right? LFP chemistry is arguably much safer than any other chemistry that's out there. Put all that together, look at it in the totality of the system, right? All the software that we provide, the design tools that we provide, those are the competitive moats against any other technology that is out there. Now, couple that with our customer service, right? We are open 24/7. Our customer service department's open 24/7. The installer can call us at any time. The homeowner can call us. They have a beautiful app where they see, their solar, their batteries. Now, even there with the connected EV charger, they're seeing how their EV is doing. If you have a VPP program, right from the app itself, you can sign up for the VPP program. So we really bring a comprehensive solution that is completely differentiated, distributed architecture on inverters, the battery, arguably one of the safest batteries, connected EV chargers, and a complete system solution for the homeowner, and of course, a great customer experience. So, so we have a very competitive solution, and like I said, competition is not new for us at all. So
that's very helpful. I guess just quickly switching gears to California, I just wanted to. You mentioned that you're educating installers about NEM 3.0. The payback is 6 years, maybe down to 5 years with some of these rate increases. You've got the SolarGraph software where you're kind of automating a lot of the calculations for installers. But despite all this, and it all sounds good on paper, but despite all this, the permits are just, they're moving down week on week, right, in the wrong direction. So I'm just trying to understand if there's anything else you can do to simplify the process and help convert some of the leads to signed contracts, or is it rates, or is it just waiting for just macro to improve a bit?
It's not waiting. Right? We have to go out there, and we and the rest of our industry needs to get out there and continue educating our installer partners, helping our installer partners educate the homeowner. That's what it's going to take. And I think all the tools are there, everything is ready. But most importantly, the economics are there. Right? It's simply getting in front of the homeowner, and convincing them that, showing them the numbers, showing them using a tool like SolarGraph and showing them what a solar install on their house would look like, the size of the battery that they would require, and then showing them the payback period that it's anywhere from 5 to 7 years, and getting better as utility rate continues to improve. So I think we are all doing the right things. We are getting out there, and at least Enphase, we are getting out there, and I'm sure our competition is also getting out there and educating both installers and customers. And so we expect it's simply a matter of time. I think you'll see the California market turn around as well.
Thank you.
This concludes our question and answer session. I would now like to turn the conference back over to Badri Kothandaraman for any closing remarks.
Hi. Yeah, thank you for joining us today and for your continued support of Enphase. We look forward to speaking with you again next quarter.
There we go. That's the end of Enphase earnings. Let's cover a few things. Let me just get rid of this right now. Okay. Wow, what a night. We didn't expect it to go down that much. I said before the earnings call that I actually wasn't going to buy anymore. I was overstretched already, but I just had to. I'm going to share with you my thoughts as I listen to that call. So before I do, I would like to ask everyone if you could just tap the subscribe button. It really helps my channel enormously. It's going up now. Enphase is just starting to go up. And also tap the like button as well. It really does help the channel if you tap the like button. It shares it out to more people. More people will learn about... Sensei just commented on the white flare. Yeah, it really does help the channel if you tap the like button as well. It really does. So please do that. Now, Enphase Energy. I'm running a poll right now on our X account. I'm going to give you the link once again. I was sharing it through the stream, but there it is. I'm going to do some full analysis overnight on this, go into some more detail and prepare a video for tomorrow. But please do... But if I just share with you my thoughts, first of all, Enphase, without doubt, and I have first-hand experience because a solar edge system is similar, not as good. I think you're muted. Oh dear, was I muted throughout that? I hope I wasn't muted. Yes, I was muted during that. I'm so sorry that I was muted during that. I apologize. I've just unmuted myself. I silenced the microphone during the show, so it's the quality is at its best. Apologize. Please do vote in our poll. I will send this to the company. I do have connections there, so please do vote in the poll. I want to get a sentiment of your thoughts. Also, as you didn't hear me, please do subscribe and tap the like button. It shares it out to more people. I will do a full review and of the figures and present it tomorrow. It's been a very long day. I am back in the morning, very early in the morning, with the Chevron earnings, opening and closing bell, and then more earnings coming up. I'm live 10 hours a day, trying to provide the best service to you. Okay, so let me go back to it just briefly. I do actually have solar on my house in the UK. It's a solar edge system. Enphase wasn't around when I had it done. And it's not as good as Enphase. And I can tell you, I'm off-grid. My house runs for free. It's an optimized system. Now, the Tesla Powerwall and so on and so forth, that isn't as I believe. Enphase, no question about it, is the best system in the world as far as I'm concerned, looking at the research. I believe it's the future. I believe that we've only got this downtrend because of inflation and the high rates. When the rates come down, which they will in the spring and in the summer, I think more people are going to line up for this. As the ever-increasing cost of gas and fuel goes up, it's going to make solar more and more attractive. From an environmental point of view, governments are getting behind it. We have to have solar. So I strongly believe that this is the way forward for many, many reasons. I think the best company is Enphase. I'm not sponsored by Enphase, by the way. just a shareholder, just like you. And I'm overstretched. I've gone all in tonight as much as I can. I bought the shares at, I think, $79, $80. to increase my position. It's a huge part of my portfolio, just under 12% of my portfolio. Looking at the numbers as well, I wanted to share this with you, and this will obviously update in the morning. We are financially on the numbers itself dramatically oversold, and of course we'll update the numbers in the morning. But if I just go from this position here, using the intrinsic value, it's how I value and how anyone values the stock. If the company was worth $78 a share, if it was worth $78 a share, then it says overvaluation at 19%. That was at $100. Well, we're now at 80. So actually, worst case scenario, if the company is worth $78, you are on value. Worst case scenario. Now, there's no way it's at worst case scenario. If you go through the figures, we're not at worst case scenario. We're more at a base cost. If the company was worth $133, you're 20% undervalued. Well, we're actually at $80 a share. So even if you added that, we're somewhere in the region of 50, 60% undervalued, in my opinion. Now, the reaction in California and in Europe, I believe strongly, like our CEO said, is temporary. I think he's a very responsible CEO. He actually addressed that the earnings call this time would be bad. We already knew. Of course, Wall Street don't like hanging around. They don't like waiting. They don't like innovation. They don't like looking to the future at all. We've seen the same thing with Tesla. We've seen the same thing with Next Era Energy. We've seen it with Virgin Galactic. Different story, but the same principle. People, Wall Street don't like to look forward, don't like uncertainty. I think it's been oversold. And I think it was quite clear tonight in the earnings call that the CEO not only has the cash, not only has the incentive, but now has the right price. I think you wouldn't be surprised. I wouldn't be surprised if we popped up 20% in the morning. Now, because of the buyback, if I was the CEO, I absolutely would buy the stock back myself. Absolutely. Because it can the amount that they can buy and the amount they could move the stock. Remember, a CEO on an earnings call can't give financial advice, and he certainly can't influence the stock. But I think it was quite clear, his comments, that the price was right. Even Sensei mentioned that and said they like the price. So I think they like the price. I think they're going to buy back, and we're going to suddenly see the market bounce. I like it. And I'm going to try and hold on to the shares that I have. I've completely, massively overstretched, but I believe in this company. I believe in this technology, and I think it's the best. I think it's cash flow, it's balance sheet. Looking at the intrinsic value, we're now massively undervalued, massively undersold. If I was getting comments during the call on my X account, and make sure that you do follow me, and I will share all of this information from people shorting the stock. Wouldn't be surprised if we get a short squeeze at this level, because if you are short in the stock now at a undervalue, and it's at least on par, at a worst case scenario, it could actually be far better than that if we look at the base case. But we'll do more figures in the morning and go through it in more detail. But I actually think we are at a good value, if not extremely undervalued. I like it. I'm buying it, and I'm going to try and hold on to these stocks, not even trim them off, because I know that in a year or two from now, we're going to be back up at $200, $300 a share. And I'll explain why I say that as well. As always, what happens with an innovative, forward-thinking technology, as solar is, EVs are, and space, and all the rest of it, those who don't understand the stock get carried away. They buy in, they get carried away, the stock goes up and up crazy. We know that. Elon Musk has spoke about it many, many times. Stop buying my stock. No one listens. And I think exactly the same thing happened with Enphase Energy. It got absolutely carried away with itself. But let's be absolutely clear, folks. Where we are today, the company has better margins. It has more customers around the world. It's expanding its base. The need for solar is increasing. Because of the EVs alone, we won't be able to power. We won't be able to power the world with the conventional power. We need EVs. We need everyone to get solar. So the incentives will grow. The governments will back it. I believe that solar has a great future. And now you're buying the actual value, if not undervalue. And you can look at it. It's going back 3 years. All of this was overbought, no question about it. But since all of this, the company has grown. Even though temporarily the numbers are down, we're buying it for this price, which in my opinion is dramatically undervalued. So for me, even though it's a huge stretch, I've gone all in on it, and you can see how my portfolio is moving. If I just share with you in the after hours, you can see my portfolio is moving because I bought a lot of this, and it will make my portfolio move quite a bit. So I'm all in. I will just want to leave you with that. Thank you all very much for joining me this evening, for being part of tonight's show. I much appreciate that. But that's it from me. I'm out of here. So thank you ever so much indeed. So that all it needs me to do is wrap up the show. I'm not going to do day trader of the day. I'm going to put this video out now under its own steam. So I know some people like to watch it later. So I actually edit the video, just get rid of me talking at the beginning and at the end. Put the call out, enhance the audio so it's improved for you listening on headphones if you're driving, because it's always telephone noise. So I tried to make it sound better. Let me just answer a couple of questions before I go. I do have some of you asking me questions. We've got, how many have we got now? 125 still watching, just 87 likes. Is it possible that we could get 100 likes? It would really help me, help the channel, help Enphase, share the story out of what we're talking about tonight, and get more people watching Enphase. So please do that. I'd much appreciate it. Let me just bring you back to the stock a minute. It's going up now. Look, 81. I think this is looking good as far as I'm concerned. Let me read some of the comments. Remember, I commented that I feel it will go down 15%. I sold 200 shares today at 98. I'll buy them back in the morning. Congratulations. I didn't sell any of mine. I'm not posting any profit, any tax. I'm just holding and adding. Off topic, space on the rise again. It certainly is. SPCE is rising 152. I know exactly. Very nice indeed. Thank you for bringing that to our attention. There were a couple of questions here. Alan, I don't know if Alan is still here. I truly believe that you could build your channel if you could consistently listen to everybody's opinion, not just those that are paying you dollars. Block the ones that are abusive. Alan, let me just be absolutely clear. The reason why I go members only most of the time is to provide a better service for my members. I want to answer everyone's questions. It's not I don't want to hear everyone's opinions. I do listen to everyone's opinions. I do reply to everyone's opinions. The reason why I go members only, because the live shows generate no income for me. I make no money from live shows, and I wouldn't be here if it wasn't for those members paying a couple of bucks a month. That's all it is to be a member. So I appreciate those members, and part of my gift back to my members is provide many membership only services. It's not about me growing my YouTube channel and getting more subscribers. It's about me providing the best service. And on that note about I would grow my channel more if I listen to everybody. I do listen to everybody, and my channel is growing faster and faster every day. because I am actually focused on the members and focused on the quality, not just how many people I can get in the show. For me, it's not about how many people I can get in, it's the quality of people, and that's it. My members equally have opinions that I may or may not agree with. It's just that I don't have the trolls, I don't have those that are abusive. And again, as I say, it provides a better quality of conversation for my members in the chat, that we are members only most of the time. And again, if you provide the best service rather than trying to build numbers, you will grow, because that's what people want. I don't want 1 million subscribers. I want 100,000 of the best subscribers, and I think that's what my audience wants. So I just wanted to answer that for you. I appreciate your comment, and that's why I answered, even though you're not a member. That's why I did it. Sensei, who does our chart analysis, said they like the price. That's what I was talking about buying back. Kite noticed it as well. That statement from the CEO was a bold one. You have to remember they can't say too much, because that would influence the stock. We wouldn't be appropriate. I like the passion. Someone said the CEO got rather angry, and Growth Stock Wiz said, I like the passion. I absolutely agree. You like the passion. It was very passionate. I absolutely agree with you. I never heard a CEO get angry with investors. I don't believe he was angry at all. He was just passionate. So there we go. I've gone through all the comments that I've just seen. Is your total portfolio back over 50,000? Nowhere near. If not, Enphase can get it there. No, my overall portfolio is nowhere near 50,000. It's 48.3. 48.3. Yeah, I'm sure it'll go there. No question about that. I think that's it. I think we've covered all the questions. Thank you ever so much, everybody. I will do more analysis on this tomorrow when we can put all the figures together, but I'm pretty sure for me, it's a buy. That's it from me. So thank you all very much for being here. Check out Sensei. If you'd like to know more about Sensei, he was doing our charts analysis for us. If you go and look over here, this is Sensei's website. If you want more information, I will give you the link now in the chat. It's got free services and premium services. If you want to know all about his services and our crypto challenge, you might want to go and check that out. Do you think Google will drop to $100? I haven't got time to look at that now, Nishan Singh. I apologize. I will review that tomorrow. But that's it from me. Thank you very much for being here. Thanks for all joining me. I'm back in the morning with Chevron earnings early before the show. This is our show tomorrow. Upcoming live streamed Chevron earnings. Then we have the opening and closing bell. Nothing after hours tomorrow other than my music concert on my music channel. Join me for that. And then we have Sensei Crypto preparing you for the week on his Sunday show. I am back then with the McDonald's earnings. So join Sensei on Sunday for the crypto information and preparing for the week's charts, full technical analysis. Upcoming live streams is where you find all of the shows as they appear in order. Right, that's it. My portfolio is moving up in the after hours. Virgin Galactic is doing well. Palantir, I'm in that. That's moving up. Gold is going up. S&P is going up. Amazon, great earnings, phenomenal earnings actually. Apple's going up. NEE, Solar, going up. Look, see, Enphase Energy bouncing around the 80. I'm holding it. Coca-Cola, J&J, awful night, and that'll do for now. So thank you ever so much indeed. See you all back tomorrow. I'm not going to do the credits. I just want to get out. There was no super chats during the show, so I just want to end the show. In fact, I should probably just roll the credits, because we did get a lot of subscriptions, I believe. So let me just adjust this. I accidentally moved it during the show. There we go. It's slightly out of center now. There we go. Let me just line it up again. Stars of our show. There we go. That's better. Subscribers, Jeff Van, Victor Hernandez, Mark, Philippe, and Joel. That's just the public subscribers. They're very well, maybe there was a lot more, but they're not the public subscribers. That's it from me. Thank you ever so much indeed. See you all in the morning. As always, as I always say here on the show, take care of your money, take care of yourselves, take care of your crypto. Look forward to seeing you early in the morning for the Chevron earnings into the opening and closing bell with full analysis of Enphase Energy. Until then, as always, take care of your money, yourselves. Oh, 4 likes. Look, 4 likes to get to 100. Can we get 4 likes? Just 4 likes. Can someone smash the like button? We got 4 likes. Let me play let's do the play out music. There we go. Can we get 4 likes? 95. Someone decided to down like. That's absolutely fine. I don't mind if you do that. But do something. You never know. We might just get 100 likes in the next couple of seconds. Shall we hold it there just a second? 95, 96. Oh, it'd be great if someone is watching right now. Thank you to everybody who joined me on TikTok this evening. Thank you. Thank you to everybody on X. And thanks to all our subscribers. No. I'm 97. Oh, we're so close. Just 3. How many people are watching now? There's just 75. We've lost. Everyone's leaving now because it's the end of the show. That's perfect. Understandable. 76. 98. Oh, 98. Can we do it? That'd be absolutely wonderful. Yes. Fantastic. Thank you ever so much, everybody who shared that, liked it, supported the stream. That's it from me. Thank you ever so much. I'll see you all back in the morning. Brilliant. It went to 101 then for a second, back down at 100. All right, that's it from me. See you all back in the morning. Have a wonderful evening. Until then, as always, take care of yourselves and each other. Bye-bye for now.